When I think of Singapore's role in blockchain finance, I think more about payments than capital markets. That's perhaps because its regulation is baked into the Payment Services Act, and everything kind of stems from that, as opposed to other jurisdictions like Abu Dhabi or Hong Kong, where there seems to be much more of a broader capital markets approach. Nonetheless, there is plenty of activity in the tokenization story for all kinds of assets in Singapore. To get a better understanding of real-world asset tokenization in Singapore, I spoke with Rehan Ahmed, who is the CEO of Marketnode. Marketnode is owned by SGX and Temasek, so it's part of the Singapore Inc. family. So we spoke a lot about the trends that are of most interest to intermediaries, but also to issuers and to investors. If you found this conversation interesting, then please leave a comment. Tell us what you thought, ask a question, and please support the program by helping us remain discoverable by the algorithms. So, like, share, subscribe. My name is James DiBiasio, and this is my report. Rehan Ahmed from Marketnode, welcome to the program.
James, thank you for having me here.
So you are CEO of Marketnode, which is part of the SGX empire, I guess, but with a very specialized dual mission. You've got two aspects to the business, which I'm sure you'll be able to explain better than me. You've got Gateway and Fund Node, but essentially you are around post-trade standards and support in tokenization of real-world assets. Um, Not so much an issuer platform, but rather, well, I guess Gateway does also support issuance for fixed
Indeed.
income and credit. So,
Mhm.
and then the fund node is basically documentation and processing for funds. So
Sure.
with that, um, you sit at the heart of what is going on in Singapore, particularly when it comes to anything related to fixed income or structured products. And so you've been at this for a few years now. So what is the state of play with real world asset tokenization, both in Singapore or from your vantage point across the region? And how if you got some hard statistics or quants that you can put on that, it'd be great.
Indeed. So again, James, thank you for having me here, and I do want to congratulate you on GDB report. It's a very interesting read.
Thank you.
Some great articles in there that get very technical, which I love. So I think before I jump into answering the questions, maybe James, it's useful for those in your audience who don't know MarketNode, for us to actually explain why we got set up in the first place. What is it we do? Why do we do it? Right? So you rightly pointed out that we spun out of Singapore Exchange back in 2021. We had two founding shareholders, which were Singapore Exchange and Temasek. And the thesis even back then, when asset tokenization wasn't as favorably looked upon as it is today, we had a thesis which is when you look at Asian wealth products, whether they originated in Singapore, Hong Kong, or any other market, we had a thesis that given the size of the Asian wealth market, and let me give you some stats here. If you look at Singapore as a market, these are our regulator stats, around 5 trillion in AUM. Hong Kong, you're well aware, has recently overtaken Switzerland
Yeah.
as one of the global wealth spots and booking spots as well, right?
Yes.
And secondly, if you look at Asia generationally, there's a huge demographic shift here that you can't deny, right? One stat I read a while ago was China, not a market that we cover, but still very telling that 60% of the world's youth is basically based in Asia, right? This is the under 30 population, which is a combination of China, other markets like Indonesia. So we had a thesis back then in 2021 that a lot of wealth assets in Asia, and let's define these wealth assets, predominantly funds, structured products, credit, as you mentioned. Most Asian wealth portfolios have a real estate component, a commodities component. We had a view that a lot of these would exist on chain. Now, today, when you buy an ETF or an equity, when you think about market infrastructure, that's typically an exchange or a clearinghouse. The question we asked ourselves 5 years ago was, if you had to build a very similar factory-like infrastructure for these assets to come on chain, what would it look like, right? And
Okay.
infrastructure takes a long, long time to build out, right? Now, essentially, how long does it take and what do you have to build were questions we grappled with in 2021. And to us, there were quite a few layers in there that you have to get right. So as opposed to going through what we do as platforms, maybe I'll just talk about capabilities and layers, right? The first basically capability we have to build out is data transformation, right? What I mean by that is if you look at how we look at data on assets on chain, it looks very different from how, an existing transfer agent or bank would look at this, right?
Because the data is baked into the token.
Precisely, precisely. So how does a bank read that? How does an asset manager read that? How does a wealth distributor read that? You need to have a data transformation layer. So that's the first business we built out. Second business you need to build out is, one of the fundamental challenges with tokenized assets globally, not just in Asia, is there aren't many buyers simply because they don't have the infrastructure. Self-custody, I think in when you look at wealth-like assets, it's obviously there for crypto. I think it's a little unproven for traditional assets. And essentially, you need a bit more of a network that can hold these assets.
I
So the
think
second
we've also
layer,
seen, yeah,
go
I mean,
ahead.
I think we've also just with so many lost passwords, I mean, some
Precisely.
great percentage of Bitcoin is lost perhaps forever. And so it's not exactly self-custody is not, I would say, not for some people it's perfect, but at scale, I'm skeptical.
Exactly. I mean, when you start thinking about fund markets of 5 to 6 trillion across two jurisdictions that I mentioned, you can see the scale of the potential issue. So our view has been that, look, many of the institutional clients that we deal with are happy to maintain their current custody structures, which is giving that over to a third party, but you still need to have a network that's willing to buy and hold these assets. So the second layer we built out over the past few years really has been a distribution network. And let me share some stats with you. So in markets like Singapore, our fund node platform you referred to is basically a funds distribution network,
Mhm.
right? And given that Singapore, for example, we have close to 1,000 funds that are available for sale in Singapore at a retail level, and a lot more on the institution side when you bring in the offshore funds. So last year, as an example, we crossed about 1.5 million in fund transactions on that messaging layer, right? The third bit we then had to build out was tokenization, right? Which is a complex beast. Tokenization as a technology has evolved a lot. Actually, the good thing for issuers and distributors is the price of tokenization as a technology has come down significantly. But on the flip side, there's a lot more than just the tech. You need to have the right licensing. So, for example, in 2025, we got licensed by our local regulator, the MAS, for dealing in securities, which includes funds, structured products, and bonds. You need to be able to not just tokenize, but you need to be able to distribute, right? Once you distribute, you need to be able to make sure your asset servicing is done correctly, right? So when we say tokenization as a business, the tokenization tech is the easy part. You need to have distribution rails. So one of the key things we did last year was making sure that we see a lot of liquidity in EVM chains, but also non-EVM chains. We have partnerships with the likes of Stellar, XRP Ledger, and Solana last year. So it's really sort of broadening our liquidity channels and some of our settlement rails. That was a big thing for us last year.
And
And go
yeah,
ahead.
can I ask Rehan? So, well, why don't you finish your point and then I'll ask my
Sure,
question. I don't want to interrupt you.
sure. So I think these are the three layers we spent the past 4 to 5 years building. And the question is, what comes next, right? So obviously, if you have assets that you're issuing, distributing, servicing on a day-to-day basis, only then can you start thinking about what are some of the collateral financing and lending opportunities that come out, which is very much in our 2027 roadmap. But just getting these three things right at a market-wide level, again, trying to, get our 1.5 million transactions in the messaging layer right,
Yeah.
that's a lot of work, right? So yeah,
Okay.
back to you.
So my question, it may feed into the comment then you just made about what you're looking at next for collateral and other uses. And that
Indeed.
was that my perhaps simplistic understanding of what we've seen in real world asset tokenization so far, because it began with the tokenization of T-bills or money market funds at a time when interest rates had risen and DeFi returns were mostly smoke and mirrors, and so they had disappeared. So
Hmm.
the driver into tokenization came from crypto native people who decided that 5% was just fine. Since then, we've seen people roll out a variety of products, but I get the sense that when I hear the intermediaries and the manufacturers talk about it, they talk about the benefits of using blockchain rails. So the instant
Hmm.
settlement frees up capital, cuts out a lot of reconciliation costs, etc. But that's not necessarily of interest to, certainly not to crypto native holders. They don't care about that.
Hmm.
And it's not really of interest to issuers either necessarily. I mean, there might be some benefit, but they're not the ones capturing that benefit. So I see
Hmm.
this disconnect between what the intermediaries want and what the issuers and the investors want. So
Hmm.
when you're looking at building new tools, is that liquidity fragmentation between DeFi and the institutional world, is that
Hmm.
permanent? Are we going to have just two completely separate markets? Or will there be some connective tissue, in which case these pools of liquidity begin to discover one another?
Sure. So I think another way to answer your question, James, is, or so another framework or lens to apply here is I think the demand is there, but I think it's very cyclical, right? So let me explain what I mean, right? So, we spend a lot of our time in Hong Kong speaking to institutional clients. We've had a presence there since 2022. And as you're well aware, being in Hong Kong, that there's a lot of money market funds that are coming onto these virtual asset trading venues, right? And when you speak to some of these platforms, what you realize is that when pure crypto is not doing too well, people love a safe home where they can get reasonable yields backed by a tier one asset manager, right? All being done on a secure, compliant platform, right? So I think the two sides have discovered each other. I just think that allocations in and out of traditional tokenized real world assets is very cyclical. So you and I might be sitting here. I mean, last night we were speaking on these on the 5th of June. Last night we had a minor sell-off given strategies selling off their Bitcoin portfolio, right? My bet would be that today you're seeing some of that money actually going into some of the money allocated for BTC actually going into tokenized funds. We might be again speaking in September, and there might be a very serious rally happening in crypto, at which point you may have to think about exiting your RWA to participate in that rally, right? So I do think it's very cyclical. I think the line that we see is your crypto native users who have a pot of assets,
Mhm.
and the question for them is, do they keep them within crypto native instruments such as BTC and other coins, or do they bring them in and out of tokenized RWA? I think that's just a dichotomy we have learned to live with, right?
And how much of that is the market versus purely institutional money that's not crypto native, that's not
Mm-hmm.
interested in necessarily in cryptocurrency holdings, but rather they actually want or they feel there's some reason to have some sort of fixed income instrument or other kind of real world asset for its own sake in blockchain form.
Sure. Okay, so I think look, I've been involved in market structures broadly, and you've seen them evolve over the past 2 or 3 decades, right? My view on adoption in this market is that tokenized RWAs, before we get into the B2B demand,
Mhm.
right, it is actually going to be driven by retail, right? So, and what are some of the drivers for retail? As an example, I transacted in a fund a few weeks ago, right? And I think I just got a redemption my redemption proceeds in that fund. And this is supposed to be a very efficient, tier one fund, right? Could I reasonably expect my nephew to accept a T plus 10 settlement going forward? Highly unlikely, right? And my nephew is much, much younger than I am, right? So essentially, I think generationally, the expectation of settlement, uh, uh, basically the instantaneous settlement, is going to be much higher than it is today. I think some of the efficiency, but also access. So, Jamie, we spoke about efficiency, but I think when you look at some of the private markets and structured notes issuers, access is a big question for them, right? I don't think we're looking at a world where issuers want to be able to sell $1 worth of their private fund or $1 worth of their structured note, But I think if they're able to pool meaningful access down from a minimum size of 10 million to 500,000 to 50,000, I think there's sufficient demand there,
Mm.
right? So I think the B2B adoption of this overall tech stack will be driven by the B2B2C ask for the tech stack. That will then force the change over time, right? My view, and I've spoken about this earlier, is there's a good reason that banks have been running their infrastructure. They have to, they're subject to a lot of risk guidelines, a lot of regulatory guidelines. For them to make these changes is understandably very difficult, right? But when clients start to ask the intermediaries these questions, the intermediaries start to ask the banks these questions. And that, to me, is when the virtuous cycle begins.
And we've seen some banks have taken the lead on some of these issues.
Mm-hmm.
Usually the very large global ones that I guess have some resource and are most likely to hear that kind of plea.
Mm-hmm.
But in general, when you look at banks or large financial institutions, where are the gaps still in terms of either their capabilities or aspects of their business model,
Mm-hmm.
or just the nuts and bolts of understanding things like KYC or legal title or this sort of thing. So where do you see the existing gaps for traditional financial institutions if they are getting these, if they're hearing this noise, they need to do something, are they ready?
Right. So I think let me break that answer down and then I'll give you a view on where I see most of the attention is being spent. So you mentioned a good point, which is the legal and reg, which is there an overarching framework for issuance of tokenized assets? The second area I'll speak about is money, digital money, and the third area is digital assets, right? So when you look at legal and reg, right, essentially what some of the industry bodies have done really well, and I'll pick one on fixed income. So ICMA is the International Capital Markets Association. They've done a lot of work into legal and reg standards, basically coming up with the bond taxonomy standards, basically how prospectuses and other bond offering documentation have to be amended to make a bond uh, digitally registered, right? So I think when you look at certain asset classes such as funds and bonds, we're now at a slightly more mature stage where there's enough issuers who have tokenized share classes. I'll share one that is very publicly known with us. One of the first few money market funds that we brought on chain was Maybank Asset Management, and essentially, we had to work with them to think about what is the actual structure, what is the role of Marketnode, how do we step in, how are we named, how are we looked at. So I think there's enough work done in that space. Now, then when I look at the energies an FI has to spend between digital money and digital assets, most of the FIs, in my view, today are spending their time on digital money, right? Which is, for example, creating their tokenized deposits. You're aware in Hong Kong that there's agreements given for two
Right.
stablecoin providers.
Right.
Personally, I'm seeing a lot more action on digital money from the FIs, from the banks today. The asset managers, on the other hand, so some names that are very well known in the tokenized fund space. You look at Franklin Templeton, you look at Wisdom Tree, you look at Fidelity, you look at BlackRock. I would say the big tier one asset managers are doing a lot, right?
Mhm.
Now, essentially, if you look at Singapore and Hong Kong as fund management centers, each one of these so Singapore, as an example, has 1,300 registered fund managers. I believe Hong Kong has 2,500,
Yeah,
right?
it's a large number.
So we actually really like the fact that a lot of these large fund managers have done a lot of work on these models. We're a market neutral infrastructure. We have our own standards. We have our own ways of tokenization, which I would like to believe are in line with some of the best practices set. Our question is, how do we bring it to the 1,250 fund managers that don't have those resources, right? But want to enjoy the benefits. So that's how I'd look at it. James, I believe that answers the question around where I see some of the focus. Banks, a lot on money. When I look at the asset originators, a lot in tokenized funds, because funds are a very elegant expression of an investment strategy. Right?
How are you competing when it comes to the asset management piece with
Mhm.
networks like Calastone or All Funds, they have grown up to have very substantial networks between asset managers, distributors, transfer agents,
Mhm.
and there's sort of communication vectors between all these different players. I know they're interested in some of the same uh, concepts that we're talking about today. So, do you sense that there's a race on? And if that's the case, what is the market node competitive edge?
Great question. So, if I look at tokenized assets, James, it's hard to tell, what the market landscape is,
Mhm.
right? Everyone has a potential to be a competitor, and everyone has a potential to be a partner, right?
Right.
And the names that you've mentioned, we've looked at partnership opportunities with a lot of these players. The way I'd answer that question is we as a firm have many different layers, as I mentioned. We have data, we have networks, we have tokenization. But some of the names that you mentioned, broadly, we compete in the network space, which is how do we create a messaging network between parties. We are, since day one, we've been Asia focused. We continue to be Asia focused, right? Now, the big question is how do we grow from being a Singapore and Hong Kong presence to something a bit more global? Now, some of the interesting things in the names that you mentioned is all of them have gone through acquisitions and
Mhm.
consolidation, right? And effectively, there's very, very few players left in fund networks globally because of this trend. You might be aware that Euroclear is one of our investors. We're actually their first investment in Asia ever. And last year, one of the things I did not mention is that we have a live transaction linkage with Euroclear, which means that clients using us have access to the local network, but also access to the Euroclear funds network. So I'm coming back to answering your question now. I think the way for anyone like Marketnode to have a seat at the table is through having the right international partner, right? Versus someone in Asia trying to build this organically in markets like Europe.
Yeah.
So we've been working very closely with Euroclear going back to 2019 as a founding team. It was a very natural step to take this linkage live, which we did last year. And later this year, we'll be enhancing that linkage with them across a lot more in post trade.
What is happening in terms of at least just with Hong Kong or cross-border connections with other
Mm-hmm.
local markets? Um, how much of the documents that you cited earlier, the 1.5 million that you processed last year, how much of
Mm-hmm.
that is for, Singapore plus another market? And what are the friction points of growing that, or do you see it just leaping ahead?
Sure. So I think in Hong Kong, right, when you look at they have many issuers in Hong Kong, they have many distributors in Hong Kong, right? I would like to think that in Hong Kong, the look, we're not local funds market infrastructure in Hong Kong as we are in Singapore. The kind of businesses we operate in Hong Kong are our data and AI business that has a few clients in Hong Kong. And I can't share too much yet on some of the things that are coming up in Hong Kong. Hopefully, your audience sees them live in Q3. But the opportunity we see for Hong Kong is how do we work with issuers in Hong Kong to be able to distribute their products in non-Hong Kong markets, right? The friction, and Jamie, you mentioned this point earlier on efficiency. I think as a business, you only get so far trying to close the efficiency gap. What really moves the needle for anyone who is issuing assets is how do you open up new distribution channels for them, right? So if you have a very active presence in Hong Kong, you could be a brokerage house that is very active there. Maybe you've just set up your presence in Singapore. You're looking at how do you broaden your presence in Singapore. That's where someone like us tends to come in,
Okay.
tends to fit in, right?
All right.
Versus the other way around.
Rehan, thanks for your time today. I want to just close here. I wanted to go back to you talked about your product roadmap.
Mm-hmm.
So just I guess I've got a three-way concept around this. First is in terms of what's actually being tokenized that you are supporting
Mm-hmm.
um, in fixed income. What are the actual products? You mentioned money market funds that you're doing with one of the Maybank units and so on.
Mm-hmm.
Is it at this point still pretty much just money markets, or are we seeing a variety, and what does that look like? Um,
Sure.
Second, maybe just expand a little bit about the the future use cases that you want to promote with new types of product. You alluded to it earlier, but maybe just a little more detail. And then third and last, to what extent, as you're thinking about that product roadmap, are you thinking about AI and agentic because that's obviously everybody's favorite buzzword?
Indeed, indeed. Okay, so let me start off with what our vision is to bring the different products on chain. Then I'll explain where we actually are. So as I mentioned at the start of this chat, we believe in the replication of the Asian wealth portfolio on chain. Let's define what that is, right? There's always a funds component. There's always a structured products component. There is always a credit component, a commodities, and a real estate component. So in steady state, we believe you need to have at least 5 asset classes to have a meaningful presence on chain. Today, we support funds, not just money market funds, but other kinds of strategies as well. So for example, index tracking strategies and bond funds. I'll give you just some of the names that we work with that are publicly known. So Maybank was one of the first funds we brought on. Since then, we've made some announcements with Franklin Templeton and Wisdom Tree, again, more for a family of funds. The second one is structured notes. We support that today. Asia is one of the key subscription markets for structured products, very, very popular. Vanilla structured products like FCNs. That's a product that we support today. What is coming up a bit later in the year is commodity-backed structures. So my hope is by end of this year, out of the 5 products that we want to have on chain within the Asian wealth portfolio, we have 3 of those 5 live. Because what we don't want to do is bring 200 products in and then hope the demand will come. It's been quite a paced sort of release of these products coming in.
Okay, great.
Yeah. So that's where we are. To move on to AI, everyone's favorite topic. So interestingly, last year, we spent a lot of time debating what does AI mean for asset tokenization, right? And if you look at an asset's life cycle, there's very discrete parts of the value chain, right? You issue an asset, you record and service an asset, you trade it, and it then matures, right? So the question to ask ourselves has been, where does AI add most value? And I'll give you a hypothetical use case here. When we work with structured notes issuers, typical volume for a structured note issuance is per bank or per issuer, anywhere from 2 to 500 notes a day, right? Now, there's a good reason that structured notes have typically taken 10 to 15 days to settle, because you need someone to extract that data. You need someone to input that data into a booking system, and you then need to settle it, right? So as opposed to saying we use AI across everything, we've actually just pinpointed where it's most useful. We think in the issuance and booking system for these very high velocity, high churn assets, this is going to be very useful. So what could a future use case look like? You issue 400 notes that are very varied in terms of structure. You have AI to parse them to extract the information you need to put in the token. And as opposed to waiting for 15 days for it to settle, you could do it by tonight.
Right.
Right? That's a very interesting use case. The second one would actually be in operations, right? So, Jim, I'm sure your audience has bought structured notes in the past. I'm a pretty frequent investor myself, and you realize from time to time there's always something off in the payment or the calculation, right? Or you got a notice incorrectly, right? I think the opportunity for AI to make a meaningful difference in streamlining asset servicing is immense, right? So those are across the life cycle. I don't really know if it adds too much value in terms of trading of the asset, but I think these 2 parts of the life cycle, the beginning and the end, I think it has a meaningful role.
Right.
Now, what are we doing about it? We came to this conclusion that AI was going to be, we're not an AI shop, but we came to the conclusion that it's a necessary enabler for tokenized assets on chain. So last year, we pretty much reconfigured our technology team. We actually ended up doing, I guess you can call it an acqui-hire of a team in India that was an AI and financial services team. And the learnings we have from these people as to how they crack out code, new developments, bug fixes, automation of operations has been immense for us. And we've been working with this team for over the last 8 months, and you can really see the speed of delivery now has just changed. Once you start getting structured notes at speed, the end client will start seeing the inherent improvements in here.
Right.
So that's an example of how we use it today. We don't make a lot of noise about our approach here, but we've embedded that into our vision to have the Asian wealth portfolio launching.
Great. Well, I think the overall theme here has really been about what's happening with providing better ways to provide services to the growth in Asian wealth. So
exactly.
From that perspective, Rehan, thank you so much for joining me on the JDB Report.
Thank you, Jane, for having me, and look forward to being back again soon.